Okay, everybody, it is me, Gregory Mannarino. Let me say this right off the bat. I'm in a freaking great mood today. We have to talk, you and me. So yes, Thursday, February 10th, 2022, people. Let's start off with the economic news. So this morning, not me, and probably not you, was people were sitting here, waiting for this inflation number to come in, and we all knew it was going to be bad. The market knew it was going to be bad. Anyone that didn't predict or believe that this number was going to be bad is, again, deluded. So this inflation number came in worse than expected, 7.5% year over year. In the month of January, it went up 0.6%. I mean, who's surprised by this? Are you? If you follow this blog, are you at all surprised? How about freaking no? You're not surprised. And this is nothing, people. Look, first of all, these numbers, you believe them? They're obviously in la land. They're all just made up. And they'll just figure it out any way they want to. But let's look at the market real quick. How did the stock market, or is the stock market reacting to this worse than expected? I mean, you make it up. Make it up. What do I tell you all the time? Make any of this shit up. Seriously. Well, stock futures are lower, but nothing dramatic at all. I mean, seriously, I just told you yesterday, this market needs to drop. This market needs to pull back. We're not even close to seeing that right now. Are we going to get it? I really don't know. I hope so. The market has gotten stupid yet again, needs a pullback. Like I said, we're just going to keep our eyes on this stuff, okay? So on the back of this worse than expected inflation number, okay? And on the back of the market here, all right, stock futures is a little lower, nothing major. What else is going on? Two big things. Number one, the 10-year yield is sitting at 1.98. Now, if you recall, I believe it was just yesterday, I said I believe we're going to see the 10-year yield settle over 2 at one particular time, and the market is going to get off on it, okay? Trust me on this. The market's going to love it. The dollar right now, the relative strength of the dollar is stronger, knee-jerk higher on expectations of what the Fed is going to do. We're going to get a rate hike. But again, looking at the 10-year yield, where it's sitting now, it's not the number. It's the speed or the pace at which it gets there. That got my attention the other day with regard to the 10-year yield. But if you've noticed, the market's shrugging every single thing off. And people, look, let me cover this real quick. Markets are always forward-looking, okay? A rate hike is already priced in. It was priced in at the last FOMC meeting, okay? We didn't get a hike. We should have got one, but the Fed is keeping that hike in their back pocket or right up their wazoo, and they're going to pull it out because they realize, as I do, and I'm sure you do as well, that the market will respond in a positive way, especially off of this number. Again, look, yes, the inflation number, worse than expected. Okay, they're expecting I think 7.3 or whatever it was, came in 7.5. Market's not going to give a damn. Do you think the market cares about you? Do you think the market cares about me? No, the market doesn't care at all. But you must respect the market. It will reward you if you respect it. If you don't, you are going down. It's going to eat you alive like you have no idea. All right. So as I said, on the back of all this, 10-year yield higher. Mark my words on this, okay? I would be shocked if I'm wrong, but I don't think so. We're going to see that 10-year yield over 2, and I think it's going to be there relatively soon. And to probably a lot of people's shock and awe, the market's going to love it there. It really is. I think that's where it's going to stabilize. All right. Told you about the Dixie, the relative strength of the dollar. All right. We don't like to see the 10-year yield rising and the dollar at the same time. I would expect to see the MMRI, Mannarino Market Risk Indicator, to be higher today. But again, look, when we're assessing risk in the market, it's a double-edged sword. Like I told you, yes, more risk in the market can obviously mean that, things are going to get ugly. But it also means that you can also get bigger rewards out of it. More risk, more reward. So you and I, as people who are trying to take advantage of the current situation in every way that we possibly can, we look at this stuff here, we don't rattle, and we say, okay, where are these opportunities? That's all I tell you about. Opportunity, opportunity, opportunity. A lot of these other dog shit people are trying to sell you a market crash. We're going to get one. But why worry about it now when there is not a single red flag anywhere? There's not one, okay? This is a guy who studies this market inside and out, upside down, backwards and sideways from every angle. Okay, so I got your back. You know that. And I do not see a single red flag yet. We have this yellow flag here with regard to the 10-year yield. Yeah, I would say it's probably still yellow, but what does that mean? Well, it means we're not going to change a damn thing. And as I said yesterday, if we get a drop in this market, we need to buy it. We need to buy the dips. Or if you don't have any powder dry, that's fine too. You sit back and you relax. You ride the positions. You understand? Anyway, let us move forward. Cryptocurrency is doing okay. Bitcoin still around 44,000. Gold and silver at the flat line. Crude oil, WTI back around 90. Let's see how this plays out here. I told you all I expected to see some kind of pullback. We dropped a little bit, and that little tiny drop seemed to get bought right back up. Crude oil, as you are well aware, has no business being here at all whatsoever, period, the freaking end. It's all fake, just like the data, just like the numbers, just like the market, just like everything else. Nothing makes sense at all, okay? If you realize, as I know you do, following this blog here, that it's a twisted freak show. And you also understand that the Federal Reserve, as I have told you, I don't know how many people are buying the dog shit. It's probably a lot that the Federal Reserve really cares about inflation. They want to get it under control because, again, they're being duped. They don't understand what's actually. They believe that we have, a government of the people, by the people, and for the people. Oh, yeah. And they also believe that their vote counts. Make that up. Make any of it up. No. Central banks here are the government. Central banks are coordinating their actions around the world to bring about their grand finale, which is going to be the biggest market crash in the history of the world. When? Don't know, don't care. I will keep you ahead of it. This is a wealth transfer. That's all this is. They're sucking the middle class dry as fast as they possibly can because they want to finish this. They want to finish what they started, to be the lender and buyer of last resort and to own it all, okay? And you're going to be happy about it. That's what they want you to know. But look, if we understand the game, and that is the game, what do I always tell you? We are freaking invincible. We're freaking invincible, all right? Anyway, so that's the story right now, people. Last time I looked, stock futures weren't doing anything dramatic. You know what? Let me look right now. Well, I got you here. Let's just have a little fun. Wow, that's freaking bright. Okay, what do we got? So, what do we got? Man, oh man. It's taking a while for this thing to load up. Sorry about this, everybody. Just give me a second. All right, so stock futures are still lower. Nothing major. Wow. Anyway, we got this covered. I don't care what they do. I don't care what they throw at us. I don't care what we can't be beaten. Why can't we be beaten? Again, there's all these people out here. Oh, Greg is a permabull. Oh, Greg is this, and Greg's going to get everybody hurt. Really? Is that why I tell everyone to keep their portfolios hedged? Is that why I tell everyone to understand the current environment, why I explain this to them, that you need to be in risk on and risk off assets at the same time? So in the event of a shock to the financial system, we can weather it. You understand? Anyway, there's so many dumb people around. It's pretty incredible. All right, people, look, I'm gonna put a link in the description of this video to the Barrel Buddy show, which I did last night. I had a blast. Now, I'm going to give you a warning. This is for adults only. Adults with a freaking sense of humor. If you don't have a sense of humor, I'm going to tell you right now, don't watch it. If you don't consider yourself adult that can maybe hear a word or two that you might find horribly offensive, I would say don't watch that video. But if you want to have a little fun and you have a sense of humor and you can deal with maybe a word or two that's a little off color, watch this video. I think you're going to get a kick out of it. Again, link in the description of this video to the Barrel Buddy show. And if you want to complain, I have a little message for you. The complaint desk is closed. All right, look, this guy here loves you a lot. I covered a lot with you here. Hey, listen, if you like the Barrel Buddies, do me a favor, please. My lions out here, let's spread the love around. Subscribe to the Barrel Buddies. All right, let's help these guys out. I help you out, so I'm asking you, help me, help them. I love these guys. All right, I'll see you later at the end of the day. And damn, I'm in a good mood.